Welcome. Our conversation today sits at the heart of the Financial Inclusions Week main theme, which is building resilience. And in this specific fireside, we're going to explore a critical idea, which is that the resilience of microenterprises is necessarily tied to the resilience of platforms that serve them. So today I'll be the moderator. My name is Glenn from Busara, and I'm here with my colleagues Hafsa, Basu, and Ravi. So I'll let them introduce themselves really quickly, starting with Hafsa. Hafsa?
Hi, everyone. My name is Hafsa Jumare. I'm the CEO of Koamana, which is a company that operates in traditional agriculture markets. And we offer support in terms of markets management, trade, credit, and insurance.
Thank you, Hafsa. Basu?
Hello, everyone. My name is Vasundhara. I am from Prevail Fund, which is a funder we connect givers and ambitious organizations to achieve rapid growth and scale and achieve the impact that we are hoping for. My work is basically embedding evidence and measurement into all our strategic investment decisions. I'm a big believer of with evidence we can truly create outsized impact, and that's what my day-to-day work is all about.
Thank you, Basu. Ravi?
Yeah, hi everyone. This is Ravi. I lead Microsafe Consulting's work in Africa. I'm based in Nairobi. We Microsafe works across providing technical assistance and advisory services for banks, MFIs, and other financial institutions, as well as digital financial service providers. I have advised a wide variety of financial institutions, including platforms, on how to optimize and optimize the services, create more impact, and be more effective. Thank you.
Thank you, Ravi. Thank you. So I'll start with a quick recap on what we are seeing from the studies that we've carried out. I think I'd like to point out that one thing we've seen is there's a gap in terms of the resilience platforms are delivering. We aren't seeing that there's necessarily a direct link between digitization of these micro entrepreneurs and their resilience. What we saw, for instance, in Kenya is platforms are definitely drawing in more profitable and higher earning micro entrepreneurs. But on the flip side, this isn't necessarily tied to or linked to deeper platform usage. That is, if they spend time longer on the platform, use it more frequently, or order more, for instance, stock from these platforms. So it's not a direct link. In Nigeria, we saw something a bit different, where at least those who spent a longer tenure on the platforms and more, and so platforms can be beneficial, but it's not an automatic relationship. And so today we're trying to answer the question, how can platforms and funders and researchers work better together to help necessarily make the ecosystem better for micro entrepreneurs. And so, Ravi, we can start with you. You've been part of several studies exploring how digital platforms shape the lives of people across multiple markets. Speaking about Kenya, Nigeria, you've done some work also in Bangladesh and India. Maybe you can walk us through how researchers like you think about resilience, how you measure it, but also what you've learned from the studies that you've done that might help platforms do things differently so that they can help their users even more.
Right. So thanks, Glenn, for that question. So as I think all of us know, I think when the digital platforms started emerging, they were touted as the solution to a lot of problems that MSMEs tend to face, right? Structural issues like a better access to markets, better access to finance, even better access to inputs as well, and also some raw materials. So a whole wide variety of issues which MSMEs, by their sheer nature of being small in size, they are not able to access that. And platforms were the solution to do that. And all of these are needed: access to markets, finance, better supplies and everything are needed for increased resilience, right, to overcome issues that they face in their business. And of course, there, I think around, if you say 2 years back, there were studies coming out. IFC had done a very a big study which showed that there platforms were increasing incomes for MSMEs, like almost 30% increase is what their study was showing. 20% reduction in OPEX is I think that those were some of the findings, especially around, I think the COVID, just around COVID, after COVID, I think there was this euphoria on platforms and a lot of MSMEs were going digital, and this was all happening. But of course, in the last 2 years now, what we are seeing, and that's a research, I think Glenn, we were part of together. We did all this research in multiple countries, and we are now seeing that there are some sobering lessons that are coming up, I think, for MSME, and that some of the key things which I feel which matter for increased resilience, for which these platforms were set out to do, was first of all, not all MSMEs. We still see that a lot of platforms are reaching. In fact, just their reach to it's not really to the micro and slightly above micro. I think a lot of platforms do prefer to work with slightly medium, because it's much more easier to reach out to some of these slightly higher sized or bigger sized MSMEs, or the medium sized MSMEs. While we are seeing that the micro ones do still, I think they are struggle with onboarding, with better digital skills, to see simple things like cataloging and things like that. They struggle. So just that onboarding and awareness piece still needs to be sorted out, especially as you go slightly micro. And so first of all, if they're not on the platform, then how can platforms help them, right? So that itself needs to be solved, and as a first step. And after that, I feel that what we are seeing is, for increased resilience, platforms which are able to offer a bit more. It's not just some platforms are just offering marketing, right? So they are just allowing the platforms to MSMEs to come on board them, catalog their products and sell them. While that thing is there is what we feel is platforms which are going beyond just a simple service, like they're helping them to say access, say, better supplies, or access finance, access multiple things which help the business. I think those platforms tend, which are able to offer a bit more value-added services. I think those are leading to better impact and better resilience, and that's what we are looking out for nowadays. I think in the platforms which are going beyond simple thing, but which are actually looking the business of the MSME as a bit more holistically, and then trying to address the various business needs of the I think the other third thing that we are definitely we are on the lookout, and we are seeing is some platforms tend to be very short term in their outlook. Maybe it is business compulsions, whatever, however you can name it. Like we have examples of working with a big e-commerce player in Indonesia, where when we are trying to get financial institutions to link on board the platform, we felt that the commissions that were getting charged for the financial institution was so high that it was not making business sense for the financial institution to partner with the platform itself. So again, what we felt in that case is those instances are more like short-termism of immediate business needs of the platform, rather than looking at a more holistically, like how if more players can come in, it's possible to do it, they can better serve the customers, and which will lead to better longevity of the providers onto the platform. So these are some of the things that we feel are kind of have to be sort of if these can be sorted, it leads to better resilience of better impact that platform can have.
Thanks, Ravi. Thanks, Ravi. Just picking off of where Ravi left off, Hafsa, you're working in the middle of this tension where there's the pressure, obviously, to grow faster and scale faster by increasing the user base and the growth of the number of users. But there's also the aspect of growing together, where you're also helping your users. And I'd like to highlight here, it's both micro entrepreneurs and farmers necessarily build resilience. So maybe you can talk us through how their stability necessarily contributes to Coamana's resilience and sustainability, and maybe what you're also doing around, or you think you're doing around building up their financial resilience.
Okay, thanks, Glenn. So we work in traditional ag markets, both on the retail side, meaning urban markets and rural markets. That's our entry point. And for us, we find that that actually reduces the last mile cost associated with kind of finding farmers, onboarding them. And like I said, we offer different services from marketing, selling your produce, to coordination of that trade, to financing, as well as insurance. What we found about, one direct link between their resilience and ours was, I'll give an example. I think it was in 2023, where both Nigeria and Kenya were experiencing droughts and floods at the same time. It was just this back-to-back thing. And we actually found our credit product at that time, we saw a much higher default, right? Floods means both urban markets and rural, the farms were flooded. And because of that, we experienced a massive shock to our business. And I think oftentimes we don't think about, if we insure market people, we insure ourselves. And at that time, we had to introduce a number of responses. We integrated insurance into our services, meaning we're insuring at the community level. We did something very risky with Pula in Nigeria, where we decided to look at how do you insure an entire market, and integrated that product into our product. And then we also started providing advisory to the people at the market. Hey, there's going to be a flood, don't move your goods. So things like that. And I think just by helping them, that kind of reduced our problems. Another one, interestingly, was health. So we found that if there's a health issue, especially with maybe women traders in markets, you'll find that if their child is sick, their husband is sick, they don't show up. There's a bit of delay in their trade. If they're sick, a similar problem. And so we introduced insurance that Pula kind of expanded the insurance coverage to include business disruption coverage. So it's kind of a delayed payment plan. So I think one of the things we're finding in this market also is that you're having to build vertically, meaning you're seeing all these issues in more advanced markets. You find that all these services exist, but now you have to sit down with the financial service provider to develop a new way to solve all these problems that are coming about. And I think your study in Nigeria showed that the more people, the longer they were on our platform, the more they were resilient, the higher incomes they were earning, which was really, really good for us to kind of validate what we were doing. But I wouldn't lie, I think going to what Ravi was saying, it's really expensive to do these things. And there's a fundamental tension between what investors on the one hand look at your MRR. You're spending a lot of money to reach these people. It's quite a lot, right? And then you come back and they're asking you, okay, why is your MRR low? Our costs of sales, our cost of acquisition is high because we're dealing with people that are they're just difficult to reach. You have to build an agent network. We have a call center that largely supports women, and now we have to think about innovative ways to bring down our costs. And on the other side, if you take an impact funder's money, they'll tell you, here's $100, go get 1 million farmers, and it's kind of it really is. There's no practical, overall, there's no practical patient capital, as people claim, that really supports you in doing this work. So I can understand where a lot of businesses start being pushed towards, is either you want to be business sustainable and you want to be viable, and you start to kind of go towards the bigger entrepreneurs servicing that larger smallholder farmers, or you go for the vanity metrics. You go for 1 million farmers, but there's no really meaningful value. So I think there's a lot of people that play a role in what we do, and then we need those people to change and come to the table with us to solve these problems.
Thank you, Hafsa. I think what I'm hearing so far is so platforms aren't beneficial by default, so it's very important to build in services that increase the resilience of the users. But then there's a cost to doing that, and so maybe Vasu, at least from what you heard from your own experience, how does funding for resilience building services like those Hafsa has mentioned just now, how could you help facilitate creating more resilient and investable an investable ecosystem, like overall? And then just beyond the KPIs, for instance, I think MRR is one thing that's been mentioned. How do you ensure that you're de-risking the innovation so that both the enterprise, the enterprise benefits, the micro entrepreneurs benefit, and the platform's bottom line isn't necessarily impaired.
Thanks, Glenn. And it's such a good question because how you frame it as for the impact on the resilience of the ecosystem, right? And that's important because as impact investors, they're looking, that's the ultimate goal, right? So it is about like supporting platforms to reach micro enterprises or individuals that will then eventually lead to an ecosystem level improvement in the health and resilience. And what we really need to come down to is the design. So we've already heard from Ravi about, excuse me, about how some platforms are designed for deeper impact, some are not. It's fine. A world can exist where we have a spectrum of platforms providing different needs. But if our goal is really impact on the like ecosystem level resilience, we really need to come down to the design and understand if this design is really going to affect the bottom line of the micro enterprises or the individuals. And that's where it like therein lies everything that we're talking about is, are you designed for truly creating the impact? And that does require value add services that Hafsa has mentioned that are expensive. But then creating impact is then like as impact investors need to be very comfortable that this is not, it is going to go beyond like providing just a technical solution and that is going to solve the problem. Technology is not the panacea for solving all problems. Micro enterprises face several structural issues. Technology is an enabler, which will then, it needs to be designed to address those structural problems. So for investors, I think the main thing is really like first understanding, is this design going like through the theory of change, is it truly going to improve the profits of those on the platform? And then using a testing phase to understand if those the pathways to that impact are truly happening. And we don't need to conduct big research studies to understand that. But really, I think the other thing that Hafsa had mentioned, which was really resonated as well, is that being driven to achieve massive scale, get to a million farmers with and how cost effective are you in reaching that scale? I really think we need to solve for impact before we solve for scale, which is, are you designed for impact? And then you can find out ways on how you can scale that design to a larger segment. If we all can do that, because I think our incentives are aligned, we do want to create like impact for a large number of audiences, but it's really about what comes first. Um, and your other question was about KPIs, right? And this is now very related because we are talking about, of course, there's KPIs, how many people on your platform, how often are they using it, the length of the tenure, churn rates. These are signals to people finding value on the platform. That's why like churn rate can tell you, are they coming back again and again? But your research has also pointed out that people can just be on the platform for understanding price and comparing across platforms and finding the best solution. So it's a signal. I wouldn't take that as an indicator for impact. We really need to create other ways of understanding from the customers' voices, learning from the experiences. Are they truly experiencing the impact, which is now a different kind? And funders need to be, if they want that data, they need to be able to provide enough resources to be able to get such information as well.
Thank you, Vasu. So actually, just on that point itself, I think one way that we saw where the resilience of platforms and the resilience of the users was tied was the provision of credit. So where credit necessarily enables the entrepreneurs to respond to shocks quicker, but also on the flip side, the provision of credit reduced the likelihood of churn for the platform. So for those, especially in Kenya, for instance, those entrepreneurs who had access to on-platform credit were half as likely to churn. So maybe Hafsa, you can maybe you can comment on the biggest barriers to scaling on-platform credit from your own experience, from Kwamana's experience.
Yeah, I mean, the biggest barrier is the capital itself, right? To extend credit, you need to also raise that working capital. And I think, especially if you're starting out, it takes quite a bit to start proving yourself in order to generate that capital, to be able to extend capital. The second one I would say, and I think there's just a culture of, so many people take out different loans between farmers, retailers, traders. you'll find that maybe a person has 10 different loans and nobody is sharing that data, right? So I think there is a culture that's beginning to form where people, they know they can take out, it's become like free money, right? They take out credit, they move on to the next platform, and there is a group of people that are professional loan takers. And I think we need to have better data sharing across different platforms, or just better ways to have checks on this, because there are people that need this that maybe are a bit harder to reach. They're not sophisticated enough to become professional loan takers that you could be extending credit to. But I think the fact that now we're having to do a lot more KYC, spend a lot more on compliance and recovery, is also a barrier to that. So I'd say the capital as well as the kind of governance mechanism around credit.
Maybe Vasu, just on Hafsa's point, what would make you what would make a funder confident in backing platforms to enable them to overcome these barriers that Hafsa has just mentioned, to ensure that the ecosystem is both durable and it's facilitating the resilience of the user?
Yes, it's an important question. So, in the earlier, I think Ravi had referred to a seminal paper from IFC. I think this was about digitization. I'll refer to another one, which was on just access to credit and how that can be such a powerful enabler for the growth of our enterprises. And we also know in that study that it's not that every enterprise will benefit equally from access to credit. There's certain types of characteristics of companies, micro enterprises, which will grow, and that growth across the board is driven by just a small number. So it's first, how can we identify what are those characteristics, and which are the kind of micro enterprises which will truly unlock growth as a result of access to credit. And I think that goes to Afsa's point as well. Like, we just need more data on, to make that decision and make it more accurately and precisely. I think in your paper as well, you had mentioned about different levels of friction for access to credit. First is if the credit is offered and people don't even know, those on the platform don't even know that they have it, they have that access. The second is they have access, they know they have access, they just don't want to use it. And the third one is what Hafsa mentioned, is just the ability for a platform to now service so much credit, whether it's like for them an access to credit issue, or is it how do they deploy, or is it a risk appetite issue. So, and all of these can be tackled in very different ways. If it's an information asymmetry issue, that needs to be tackled differently. If it is a lack of data on your customers, that's different. And if it's like customers just don't want the credit, now that's like you need to come back to the drawing board and think about your offerings. So as funders, we need to think about, is it truly, like, what are the solutions that are being proposed, and is it right sized, and is it fit to the problem that is being faced in that particular context, and we designed for that. And of course, I think with credit we have to be very careful about over indebtedness. Really, like, is that credit even required? Is it truly going to lead us to the ultimate impact that we want? And if that's the case, I mean, we just need to make sure these checks and balances are placed, because these are real risks that comes with trying to pursue financial inclusion, and we need to be very careful with that.
Okay, thanks, Vasu. To the audience, you can start putting your questions in the chat, and then if we have time, we'll answer them. So maybe very quickly, one thing we did notice is that also the role that agents play in the onboarding process, and also in necessarily building trust and sustained use. But it's also a big operational cost, especially with regard to acquisition, and this may or may not pay off. And so perhaps Hafsa, you can help us understand what the trade-offs are in terms of strengthening in terms of using platforms to strengthen your position in the market, and also in terms of building user loyalty. Like, what are the trade-offs for using them?
Yeah, I think I mean, operating in this space, especially in Nigeria, you find that you really can't reach rural people without agents. It's just not feasible. There's like the issue of either literacy and kind of use of technology, or even the stability of the connectivity itself. And so I think we're heavily reliant on an agent network. We do have a proportion of users that can self-use, but I think especially for Nigeria, we find that agents do a lot of the work. They support, especially with rural women, they support, and our call center also does the same. And so I think at some point we realized that we cannot do just this tech first approach without trying to kind of soften our barriers and reach people. Interesting in Kenya, we see it's much easier. I think there's both digital and connectivity, there's a wide coverage in Kenya. M-Pesa is also a big changer. We have two types of financial integrations in Kenya, with Equity Bank and also with M-Pesa, and that's a game changer, because payments become like the biggest friction that we face. And I think, I don't think that would go away anytime soon. I think overall, as digitization overall across the board becomes stronger in these two markets, we'll see less of a burden. But I think one thing we've decided not to do is to force it down the necks of the people we deal with, because when you do that, you actually exclude a large chunk of people. And so, it is expensive, and we're always thinking about ways to bring down that cost. And honestly, we haven't seen a kind of perfect way to do this. So happy to hear even from the audience if they have suggestions, but this is the path we've chosen.
That's great. So I see we're a bit time bound, so maybe I'll ask for closing thoughts. So I see Ravi's dropped off, but Hafsa, maybe what's your biggest ask? What's your biggest ask with regard to what would you need to help build an ecosystem that sort of creates a virtuous cycle? And then Vasu, what is the one thing that gives you hope about being able to fund and build for mutual resilience, both the platforms and also the end users? So maybe Hafsa, you can go first. A quick 30 seconds.
I think for me is that data governance. There is, I wish I could solve mobile network issues, which is a big ask. But I would say as a starting point for us, having kind of more of a shared data ecosystem would allow us to move a lot faster. And then also shared infrastructure for market entry. I think some of us maybe are providing different services within the same market. So being able to do that and have that would be a strong point for us, especially in terms of reducing the cost of entry.
Okay, thank you, Hafsa. Vasu, what gives you hope?
What gives me hope? There's so much. We have to be hopeful to be able to do this work. I think different players in this ecosystem, but our incentives, we have the same goals and motivations, and the way we decide to pursue it is quite different. So I think we need to come to some sort of alignment on sequencing now, and so much more what drives growth and what is deemed useful or not. So we need to build better now based on this information that we have. So I'm quite hopeful because we know a lot more and our incentives are aligned.
Okay. Ravi, 30 seconds. What do you think research should focus on now? 30 seconds. Research focus.
I think, yeah. I think research, as Hafsa and Vasu were mentioning, I think as I understand, different platforms have their own interests. I think MSMEs have their own businesses to take care. I think research should, and each platforms, as the earlier mentioning, platforms have to cater to their investors at the end of the day. So there is that pressure that always will remain, and the tension will remain. While MSMEs are there, and they are kind of they have to clear one. I think. And researchers should try to bridge this gap of how these incentives can align with from an impact perspective. And I think there is a solution that is available. There are good examples emerging. We just have to, I think, work on it to ensure that there's a win-win for all, right? So, and what that win-win will be, I think that is what the researchers, I think, should focus on.
Okay, thank you, Ravi. Any questions from the audience, real quick? We can proceed for a few more minutes, even though the live recording cuts out here, in case there are any questions. Any questions? Okay, so I'll just give closing remarks since I don't see any. So, in a nutshell, my main takeaway here is that resilience is not a zero-sum game, but we need to intentionally design platforms in a way that deepens value for both the end users and also for the platform itself. And the path to scale can also be the path to resilience, as long as we're intentional about making that connection from the outset, from the design phase. I think that's everything from me. Thank you so much, Hafsa, Ravi, Vasu, for making time for this chat.